that we have not been in the live room, and so our audience is really just now joining us. Good afternoon to everybody on the call. My name is Anele Makhwaza. I am the founder of Igugu Global. Igugu is a green finance deal room that provides green mapping, tagging, and due diligence services to banks and corporates looking to sustainably transition and manage their portfolios. This afternoon, it is my immense pleasure to welcome Emmanuel Etahderhi and Justine Leigh to join us in this afternoon's dialogue, Green Finance from African Niche to Mainstream. Justine is not yet on the call. I'm monitoring her joining us, but we are more than happy to proceed, Emmanuel and I will be monitoring the line as well for her joining. What inspired this afternoon's webinar topic, Green Finance from Niche to Mainstream, is really unprecedented global coordination in the climate finance landscape, which Africa has been rather quietly a significant part of. 2 years ago, when we started Igugu Global and said that we wanted really to start a green finance deal room that would bridge the gap in deal data and accelerate the building of sustainable infrastructure on the continent, I spoke to mentors, and there were more than a handful of people that said, listen, there's people talking green and there's people talking Africa, but there aren't a lot of people talking Africa and green. So I'm immensely happy 2 years on to have Emmanuel on the line this afternoon, as well as Justine momentarily, really to open up a little bit of the dialogue on green finance on the African continent and share with you how much progress has been made to date. And on that note, I invite Emmanuel. Emmanuel is currently the Executive Secretary of Financial Centers for Sustainability. FC4S is an organization that was founded on the back of commitment by the UN to really start to see how climate issues and finance could be expanded, and really how we could begin to architect a sustainable finance roadmap that would be inclusive and lead us towards the sorts of societies that we haven't had yet before, and in terms of pricing in externalities that can shape the different outcomes in society. So without even going too much into that, Emmanuel, I'd like to invite you to give a more full introduction of yourself and a little bit of how FC4S came to be in Nigeria, in the midst of people telling me there's people talking green and people talking Africa, but no one talking Africa and green. You are one of the people that live squarely in that world. And it's a world that's only gotten bigger. I recall that last year in March, on my first trip to Nigeria, it was the eve of what would be Africa's first corporate green bond issuance in Lagos, an issuance by Access Bank. But can you, Emmanuel, maybe introduce yourself and tell us a bit about the story coming to building this ecosystem that led to that moment, and maybe a bit more about FC4S and your work since then?
Thank you very much, Anele, and good afternoon to those who have been able to join today's conversation from different parts of the world. It may be morning or evening, wherever you are. We appreciate your joining us, and it is indeed a real pleasure for me to be a part of this conversation. Just a bit about myself. My name is Emmanuel Etahderhi. I was seconded from FMDQ, the Africa's fastest growing financial markets group that's focused on exchange business, depository, clearing, and technology. It's a capital markets focused firm that started about 6 years ago, but is blazing the trail and today has about 4 subsidiaries. And FC4S is set up as an institution that is meant to focus on sustainable finance, driving the entrenchment of the concept and principles of sustainable finance in Nigeria and across the wider continent of Africa. And we came into being after FMDQ and the UNEP agreed to set up Nigeria's chapter of the FC4S Global Network, which is headquartered in Geneva. Globally, there are about 30 countries in the FC4S member network. Nigeria is number 23, was admitted in May last year, and we launched in October. And our membership cuts across various stakeholder institutions in the Nigerian financial markets. And our governance board has Mr. Bola Onodele Koko, FMDQ's group CEO, as the chairman, and he has Dr. Doyin Salami as the vice chairman, who is the chairman of the Economic Advisory Board to President Buhari Economics Advisory Council in Nigeria, and other notable persons within the financial markets, including Dr. Andrew Nevin of PwC and a host of other key important persons. So quickly to talk about the journey in terms of creating a green finance or a green economy ecosystem in Nigeria. The story would indeed not be complete without including the role of the Climate Bonds Initiative and financial sector deepening Africa. FMDQ, Climate Bonds Initiative, and financial sector deepening Africa went into a collaborative partnership and signed a memorandum of understanding in early 2018 to focus on developing a corporate green market in Nigeria. It was at the, it was barely shortly after the first sovereign issuance for Nigeria was being planned. We had launched a sustainable finance subcommittee as part of our debt capital market development program in September of 2017 with the full support of the IFC, the Securities and Exchange Commission, and other notable stakeholders in the market. And when FSD Africa and Climate Bonds Initiative talked to us about working together to develop the corporate green bond market, FMDQ bought into the idea and a partnership was formed. And these three parties have been driving that particular agenda since 2018 to date. And one of the fruits of that agenda is the Access Bank green bond issuance, which you're seeing. Also, North South Power has benefited from engagements with the parties in how to issue and they've listed their green bonds on FMDQ's platform. So two corporate issuances, and then even from the sovereign level, the parties have also been fully involved in working with all the key parties in the sovereign issuances, from the Ministry of Environment to SEC, to DMO, the Debt Management Office, the Ministry of Finance, and all the related institutions that have been able to see through the two issuances that Nigeria has come up with. The three institutions have worked with them, not only through the process, but also in ensuring that there's compliance with all the reporting criteria, and that we follow through with capacity building trainings for government-based institutions, for private sector-based institutions. We've literally segmented the ecosystem into various buckets and targeted specific capacity building training programs for each of these segments of the market. So I'd like to pause here a bit. If you have a bit of a question you want to ask, maybe you can throw them up. Thank you.
Thank you for that, Emmanuel. It gives us a nice breaking of the ground in terms of already the global context from an intergovernmental collaboration perspective. And I think now reflecting on the level of global collaboration that has already been achieved, I'd just like to perhaps share with the audience a little bit of what has been achieved to date, and which digs into a little more detail as to the urgency of this conversation and why it's worthy of bringing around the table all sectors and all members of the public and private sector. Uh, so globally, the green bond market in 2019 outperformed expectations with record issuances of 240 billion. Emerging market green bonds saw a 21% increase to $52 billion, bringing the total of the 21% increase of $52 billion, bringing the total amount outstanding to $168 billion. A subsect of green or brought wider than green finance, the sustainable finance, which also includes social factors alongside green and environmental factors in finance, has also seen rapid growth over the last few years. And that is a market that is still nascent, but successfully doubled during the course of 2019 to $40 billion. Really, when we look at that in the emerging markets, we split it out and we begin to see that the emerging markets outside of China are really on a steep trajectory of increasing their share of the total EM issuances. And I really wanted to ask Emmanuel or to speak to what successes as part of a really a global program and a local program through the FMDQ and CBI partnership in Nigeria. What are the successes that you've managed to hone to steepen the green bond issuance curve, and really what are the learnings for markets that are only just beginning to think about it and grow the ecosystem? Because we note that in the history of green finance and issuance on the African continent, the first issuance was really by South Africa in 2012. But in the last 3 years, Nigeria has come away as a breakout serial issuer. So I really wanted to ask, what do you believe it is that is driving the momentum forward there in Nigeria?
Okay, thank you very much for that question. It's important to put things in perspective and to see what sort of progress, if any, has been made over time in the course of building a green economy in Nigeria. You know Nigeria is committed to the Paris Agreement. It's one of the countries that signed onto it, and for Nigeria. We started a bit late, but we've been a bit also aggressive in our quest to achieve our goals, because we are in every part of the country we are exposed to the realities and the negative externalities of climate change. If it's in the north, we have an insurgency crisis that people think is probably politically motivated, but it's truly an economic problem. Lake
Mm,
Chad dried up and shrank over 80% of its size. And that Lake Chad is responsible for resourcing about 20 million persons living both in Nigeria and a few neighboring countries, including Chad and Cameroon. And the drying up of the Lake Chad has led to a massive migration down south of those who used to depend on the resources in Lake Chad. And growing up, we found that we had very good relationship with some of these nomadic persons that were coming in from the north with their cattle. They bring the cattle down south. We buy the meat and then we give them other agri produce. It was a friendly relationship. But as climate change, hits their source of livelihood hard, it affected their economic well-being, their attitudes, and they change from the people we used to know, and they become what we now know as the headsmen. That's causing a lot of problem down south and also up north. The insurgency in the north and the headsmen issue down south in Nigeria is not unconnected with the effect of climate change on Lake Chad. That's one. In the south, we have the oil producing areas, and you have the oil companies that have been exploiting oil since 1957. There's impact on the climate from all the exploration issues that is affecting aquatic life, agric life, fishing and fisheries in the south. And then there's pollution, and there's so many things up north, down south. We are all impacted. And Lagos, where FC4 is located, is a coastal state. Is in fact, if it were a country to qualify for one of the to be a member of one of the small island states that is faced by the serious sea level rise and the impact of flooding, and so there's a reason why. And then talk about the benefits of going into or having a green economy, the access to electricity from solar. Nigeria is grossly inadequate in terms of its output of electrical energy. Nigeria needs about 10,000 megawatts, but only produces 4,000 at maximum capacity. And whereas from solar alone, Nigeria could readily, the solar capacity in Nigeria, the numbers I saw recently, uh, they are bewildering. Nigeria has a capacity of 427,000 megawatts from solar alone. In fact, 5% of the land available in the northern part of Nigeria can produce suitable 10% of the capacity that we say we have. So we can produce 42,700 megawatts of electricity from solar from 5% of suitable land in the north. Yet we do not have up to 4,000 megawatts available at any given time in Nigeria. So that is why the country is a bit aggressive. If you look at the use of proceeds, since it started issuing, it has been focused on on meeting these critical needs. So it's been focused on climate change adaptation and renewable energy, solar and hydro energy, and then adaptation and mitigations to climate change, renewable energy, energizing education, and afforestation programs. The four issues from the corporates and the sovereign. So we have had two corporates, Access Bank, and the Access Bank did $41.6 million. Power did $23.6 million. The first sovereign was $29.7 million. The second sovereign was $42 million. It's part of our commitment to ensure that we raise the bar in terms of what we can achieve from tapping the vast potentials that we have in the renewable energy space and the vast benefits that nature has given to us that we can use, non-fossil sources to achieve. So I agree with you. South Africa started, but Nigeria has been aggressive. It's become a serial issue. Yeah, and also these parties that I mentioned, FMDQ, CBI, and FSD Africa, have been in the mix in terms of getting the message across to both private sector stakeholders and public sector stakeholders. As I mentioned earlier on, we have done several capacity building sessions and training sensitization with all the key institutions that are involved in these issuances: Ministry of Environment, Debt Management Office, Ministry of Finance, Securities and Exchange Commission. In fact, these institutions I've mentioned, we have them as members of FMDQ's Debt Capital Market Development Project and members of the Sustainable Finance Subcommittee. Some of them are also members of the Financial Center for Sustainability. So the Debt Management Office is represented in FC4S Lagos. The Ministry of Environment is represented in FC4S Lagos. And so SEC is represented in FC4S Lagos. In fact, SEC was with us when we went for the first FC4S annual general meeting in Geneva last year. So we have the support of these institutions and we're working together. I would say COVID has slowed us down, but otherwise, I'm sure by now we would have seen more of these issuances coming to the fore. So we believe we can also do much better than what we're doing. So that's the way we are now. We've done about, if you put it in context, together we've done about 116 or $117 million of issuances in this short period of time. $136 million of issuances.
That's really exciting to hear, Emmanuel. And I really I appreciate that you started with the real economy issues. What is driving this dialogue on the ground? In Lagos or Nigeria at large and into West Africa, we have large issues with rising sea levels that have put the built environment and real estate at risk, which was what the proceeds of the Access Bank Green Bond were for. But there are all sorts of environmental issues that have really come together to form the burning point of this conversation. I suppose this is exactly the point where people in the green finance conversation usually the finance conversation usually splits between green, the financing of green projects such as solar or water or green building initiatives, and the greening of finance. Because I think many bankers sit in their armchairs and think it would be nice to do an energy transaction.
Hello? 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 Yes, I can hear Anele. Hello, Anele?
Hello, Emmanuel.
Okay, we lost you at the point.
I'm sorry. My question was I was speaking to the fact that this is you gave us great context from the real economy drivers of this conversation, and I had gotten to a point where I was sharing that this is where in many conversations uh, it splits between conversations around finding green projects in order to raise green loans or green bonds, and then on the other hand, giving the financial institutions, banks, investors, issuers the tools they need in order to green their finance. I wanted to ask you whether you could comment on the challenges of that and sort of how far we've been able to expand the net in Nigeria, and sort of where you see the next frontier in the greening of finance.
Okay, thank you, Anele. That's a very important and interesting question. We started a different tact or from a strategy this year. When I say we, I'm talking about the Financial Center for Sustainability. We took a different path. From 2018, we've been talking directly to issuers, so to get them to understand what it means to issue a green bond, the conditions for issuing a green bond, the project selection, the monitoring, reporting, verification, and the ensuring that they report on the use of proceeds so that they can gain the confidence of investors, and all the usual things you'll do if you wanted to issue a green bond. We've also focused on talking to regulators. We actually worked with the Securities and Exchange Commission on the green bond guidelines. We had the support of the CBI in that. We've focused on the markets, getting them to issue and getting the regulators in terms of on the investment investor institutional investors to also include criteria that will allow the deep pocket institutional investors to invest in the instrument, because you can't issue if there are no investors ready to take up the issues. So we've been engaging PENCOM. PENCOM is a part of FC4S, governance board. Dr. Aminu Farouk is a member of the governance board and heads the policy regulation thematic area. So this year we took a different tag. In partnership with the United Nations Environment Programme, we set up the Green Tagging Project. And this is aimed at getting banks to look at their loan book and review their portfolio of loans to see the greenness or brownness, the extent to which they've been lending to green projects or not, and then working with them on how they can improve on this as part of their own efforts to help the drive towards a low carbon, resilient, and inclusive economy. Now, why this is
Thank
important?
you.
Hello?
Hello. I was about to. Thank you, Emmanuel. I note that Justine's just joined on the line, and I thought that would be a perfect opportunity to introduce her and allow her to come in, as the Climate Bonds Initiative is an important technical assistance partner in that regard. Justine, good afternoon and welcome. Ladies and gentlemen, I'm very pleased to introduce Justine Leigh Bell. What? Okay, Emmanuel, my apologies. It looks like Justine has joined us and is in the room, but
That's fine.
I'm not getting any sound from her.
Do you want to? Hello?
Hello? A little bit. Hello? Justine? No. No, I'm sorry. So rudely interrupted. Emmanuel, you were picking up on the green tagging project. Please continue.
Excellent, excellent. So I said this year we adopted a different strategy from what we've been doing in the past 2 years, where we're engaging issuers, engaging regulators, engaging intermediaries, and the media and different stakeholders in the ecosystem. We decided to focus on the banks and to adopt the strategy of looking at what banks are currently doing in terms of their loan books. Who are they lending to? What projects? What sector? And dimensioning the aspect of their lending that has been focused on green or projects that support climate initiatives. And that's what the green tagging project is about. So we talked to a number of banks. There are 20 something banks in Nigeria, have 2,000 banks or more in Nigeria. And we started with about 8 banks. Our plan is to go through the entire banking ecosystem, but we started with 8 banks. Out of the 8 banks, 3 initially agreed to be a part of the project. So we had a session in February, which was the last time the 3 of us actually saw physically. We had a session where we launched the green tagging project. Now, what this does is that it allows the technical partner, which is Climate Bonds Initiative, to review the current portfolio status of the banks, look at the green projects or projects related to green, and look at the non-green projects, and then work with them on how they can progress these projects or progress their lending towards more green activities, because we want the banks to be a part of the story of entrenching a green finance economy in Nigeria. Currently, it is at its very embryonic stage. It's if you compare it to the total size of the Nigerian bond market, green bonds, both sovereign and corporates, are make up about 0.44%, less than a percentage of the total bonds issued in Nigeria. Less than a percentage. We want to see it grow. We know that the period has been short, only 2 years, 3 years now, but we can do more because the opportunities are mind-boggling. I just mentioned the solar energy numbers. It's amazing that in a country that has 427,000 megawatts potential from solar alone, we don't have 4,000 megawatts from our current source of energy. So you can see that there are a lot of things that we can do there. So I'll say that the green of the financial system has to do with the banks also lending to projects, and that is why we're focusing on them and getting them to understand the role they play in this whole ecosystem of getting finance across to projects that speak to a greener economy.
Perfect. Thank you very much. I'm just going to pause there to check whether Justine has joined us on sound.
Can you hear me?
We can hear
Yes,
you,
and
Justine.
welcome.
Wow. A miracle has happened. I cannot believe this. Oh, Anele, Emmanuel, my apologies, and to everybody who is dialed in today. Sincere apologies for the technical hurdle that I've just been experiencing for the past 40 minutes. But it looks like you can hear me, so hopefully, Anele, over to you to let me know how you want to proceed.
We'd cracked open the conversation a little bit, Justine, around the developments in Nigeria. I had shared very little around the evolving and emerging market green bond landscape altogether. But I'd really appreciate if you could, at this point, introduce yourself, Justine. Emmanuel has touched a bit on the work that the CBI has partnered with FMDQ to do in Nigeria. But in your role as Deputy CEO of the Climate Bonds Initiative, your mandate is not only Africa, but Latin America. And really, I'd like you to intro yourself and perhaps give a cast the net wider on a global positioning in terms of the work Emmanuel has already spoken to accelerating issuances in Nigeria.
Definitely, I'd be happy to. Thank you, Anele. And once again, my apologies for the severe delay, but let's get going. Right, so I'll start with myself. My name's Justine Leigh, and I'm the Deputy CEO of Climate Bonds Initiative, a global organization that has been based in London with offices around the world, including China, Latin America, and Southeast Asia, and operations across 6 continents. So we've spread ourselves quite large for a very large and urgent matter, which Emmanuel was touching on, which is very much the urgency of climate change. And the organization established itself 10 years ago, actually. It is our 10-year anniversary this year, which essentially was targeting the institutional investor base, the capital that sits at about 100 trillion of assets under management across the globe in our pensions, our sovereign wealth funds, and our insurance pensions, to be able to tap that capital and start driving it towards climate change solutions. And so the organization focuses very much on mobilizing that capital through a number of different avenues. One is clearly through bonds, through the green bond vehicle, which we've heard a lot about today, which is geared towards financing the solutions we need for climate across all the major sectors of the global economy. We look to see what we need to do in transport, what we need to do in our energy systems, what we need to do in our manufacturing industrial systems and our land use systems. You get the picture that we have a deep decarbonization that we need to do globally. But most importantly, given that we have climate change all very much in the system now, you're now looking at also a resilience component to that as well. So meaning that what we build today and going forward across these key sectors of our economy need to be able to endure the impact that climate change already poses on us. And that is very much the story of the African continent, which I don't have to tell many of you who are aware of those challenges. So using green bond financing, leveraging the institutional capital through bonds, and being able to direct that to the right investments, whether that be through building credibility against the product. So we focus very much on standards and certification to create assurance to investors investing in green bonds in different markets, that what is being behind the label is true and transparent. There is also the policy and markets component, which is policy being policy guidance for governments and providing technical assistance to governments on being able to put in place the right environment to enable local issuance and international issuance to happen. It's also about market intelligence data, being able to report on that data, who's issuing what, when, and how. And then finally, of course, our market development work localized, which you've heard a little bit from Emmanuel, the work that we teamed up with FNDQ to help drive the development of Nigeria's market. If we step back and look at where we stand today, look, as little as 10 years ago, God, even 6 years ago, we were sitting at $3 billion outstanding of green bonds issued. We are now over 800 billion. We will hit 1 trillion this year. And what that signals to the market is that investors are waking up. They are recognizing the non-financial risks that are posing to their investments, and they are now increasingly becoming aware of their fiduciary duty to also incorporate that into their decision making. For those providing the investments, it is an opportunity for companies, banks, governments at national and local level to potentially access a new source of capital to finance the massive amount of infrastructure development and transitioning that we need to do. It's in the trillions. But, you know, it sounds easy, but it definitely requires to have the right things in place to make the capitals flow.
Yeah, absolutely. Thank you for that, Justine. I think that's exactly the right place to pause and reflect on the moment where we find ourselves today. Still perhaps in the belly of the COVID crisis, which has really over the last few weeks pointed sharp focus on the green political economy as a whole, right? As central banks around the world announce stimulus mechanisms, investors, communities, and people from all sectors are really wondering how this can be used to catalyze a low carbon transition. Emmanuel maybe referenced a slowing down momentarily of green bond issuances on the continent amidst the pandemic, but I'd like to ask you your sentiment and what you're seeing play out from London in Africa and Latin America as well.
Latin America and even the Southeast Asian region as well, which we're seeing some activity. I mean, you've mentioned, you know, regulators, particularly the central banks, have been doing things, taking risks, and trying to rescue their local and global economies in things they've never done as little as a year ago or a few months ago, which does open up a lot of opportunity in helping to leverage these types of investments. In other words, you know, green quantitative easing, which we have seen QE measures being taking place in Europe and other parts of even across Southeast Asia. The question now is, can some of this actually be prioritized for green? Many governments are considering what opportunity there may be to access these quote unquote green, or let's say social or sustainability responsible investors to help almost rebuild in a different way. Green economic stimulus packaging, maybe some of the words you've heard, some of the headlines, maybe post-COVID green recovery.
Absolutely.
You know, and governments are very much interested to know, well, what does that look like, and what do I need to put in place to achieve that? Look, a lot of that has been laid out even prior to COVID. You know, we've got
exactly,
you know, lots of information out there that allows for governments to start restructuring and refinancing their debt in a way that is prioritizing existing assets across the renewable energy sector or plans for renewable energies. It's about looking across the SME space and where we can encourage SMEs to be transitioning into greener operations. It's prioritizing green sectors as a whole. But it is using the definitional work on what we mean by green and using that as a procurement plan to help guide governments on prioritizing in their restructuring, refinancing of debt to be able to access those new investors who at the moment now are looking for this. There's been in China alone, I think, close to 400 COVID labeled bonds. That's totaling in about $32 billion worth of issuance in 3-month period. Of course, all of that targeting the healthcare sector and social investments. And we're beginning to start to unpack a little bit of what that is. But I'll just finish that a COVID response has the opportunity to have a very strong social emergency response in what it is investing in, but does not have to come at the sacrifice of climate resilience and climate mitigation. We can look at it as a chance to start to rebuild where now capital is more accessible, potentially, with intermediaries assisting, risk mitigation measures in place, and the role of DFIs to help to get those investments happening.
Absolutely. I saw at the start, and thank you for that contribution, Justine. I saw at the start of the crisis a lot of reports that sort of wondered whether the COVID crisis would push the climate and green finance agenda off the table. And personally, I was stunned as someone that lives on the African continent, where we know that 700 million people lack the right amount of water to be able to wash and sanitize their hands at home on a daily basis. So really, when you look at just how multifaceted and how much vulnerability the pandemic has come to expose, it very quickly, looking at our energy position, water distribution on the continent, seemed to me that this was really a unique opportunity for all of this work that you in the Climate Bonds Initiative, Emmanuel through FC4S on the ground in Nigeria, to really take the amount of agreement and collaboration that has been established and then run with it and really use it to create or to keep Africa at really even the vanguard of some of what we've seen in green, social, and the sustainable finance bucket as a whole. You spoke, Justine, to where we are, the 700 billion mark globally, to pass $1 trillion this year. Also on the global landscape, we have BlackRock that's set an ambition to raise another $1 trillion in green and sustainable assets over the next 10 years. So there's quite a lot of urgency for a lot of people already in the green finance conversation, but perhaps for people that may have been on the call, can you give a little context to why everyone should at this point be calling for a green recovery?
I think that to not be calling for it is missing a huge opportunity. And when we talk about this whole green agenda, this is not limiting itself to the developed economies. I really want to be clear about that. I think one of the things I didn't emphasize is that this is very much a global market. And, issuance has been emerging, I should just say the green finance agenda has been, emerging itself across, the ASEAN region, Asia Pacific, in China, across India, across Latin America, and as much as it's coming out of course, Europe, most notably, and then what we've discussed today, very much on Africa's developments. And so the point there is this stuff can get done, and the money is out there. And the intermediaries, the de-risking intermediaries and credit guarantees and so on, those are all there as well. We need to come together because there needs to be a prioritization about the opportunity. So, it's recognizing that if we, as a global society, are not able to respond the way, the impact of a pandemic goes to show you how very quickly and unprepared we are in the system for such shocks. And climate change is just going to exacerbate. This will not be the only pandemic we see. We will see more, and our systems are not set up to be able to endure them. And whether this be because we're having it from a health crisis, as we've seen with COVID, whether we're talking about tsunamis that are and typhoons and weather-related impacts. We've had quite a history last year of this. If you looked at the Amazon fires alone that happened in August and across Australia, it's just going to be continuing to mount. And so at the very least, we must be emphasizing resilience across our sectors, and we need to be building accordingly. And so leveraging green capital to be able to do that and start planning. This really should just be seen as a lesson learned. And we need to start building appropriately. Business as usual, how we've been operating under a globalized society over the last decades is not going to be able to get us through the next decades ahead with severe climate change in the system. And so, this is a lot of what governments recognize. Risk is the word, whether we're talking about financial risk, whether we're talking about a civil society risk on human lives, whether we're talking about economic risk and the ability to be able to, manage our economies in a way that doesn't sink out on what we've seen with COVID. This is a new world. So planning accordingly. And that's why you're seeing a lot of governments and financial institutions who are speaking about this from a very pragmatic way. Not underestimating the challenges involved in trying to make it happen. So that I think that's probably as best place to say it at this stage.
Okay. And as you cast an eye, Emmanuel, I invite you again to enter the conversation. But Justine, in the time we have left, I'd really like to ask, we've spoken quite a bit about Nigeria, but as we cast an eye across the continent, we start to see, and we've spoken quite a bit about green bonds, we start to see green mortgage products being issued in South Africa, climate risk board resolutions at a financial institution level, Kenya making bold commitments to become completely low carbon by 2020 or 2021. I want to ask you, where do you see green shoots of hope across the region and across sectors?
Thank you very much. Okay.
Go ahead.
Thank you very much, Anele. I think across Africa, the green shoots will be in the area of having green mortgages, green buildings, green real estate. I dare say we can actually probably see in the not too distant future green sukuks, and it's particularly meant to finance real estate projects. I speak about these issues because I know that on the ground, behind the scene, there are ongoing efforts by different stakeholders to bring out some of these products. And so the real estate area, because there's a huge housing gap in Africa. Nigeria alone has over 20 million, so they say, housing gap. The numbers are out there, but housing affordability in Nigeria is an issue, and how the available number of houses that can meet the needs of people in the urban cities is quite limited. So that is one of the areas in which I see, green shoots coming out, the new products that could drive growth in green finance will come from this area where we have a lot of pressure points or pain points. So apart from the that area, renewable energy. You can see what the Kenyans have done with M copper, and what where you can have access energy, through the series of beautiful initiatives they've developed from M-Pesa, M-Copper, and all of that. Justine knows a lot about that because she spent time in Kenya. She's been working with the Kenyans on quite a lot of issues around the green bond market. I see some of those things, coming over to Nigeria and spreading across other parts of Africa, where you can have solar power delivered to the people, and then solar can be sold as a service. In that area, you will have some sort of expansion in terms of green financing because it's bringing solutions to specific problems. Another area is in the area of agric, financing agric. If you look at the climate change risk across Africa, one of the key issues that we face is the impact of climate change on major cereal crops around and across Africa. The literature out there shows that Namibia, Nigeria, Kenya could be affected seriously, and across other areas, by the impact of climate change on farmers' yields. And so, if we see if projects that are focused on these areas come out, you will see investors likely they'll be willing to put money into this kind of projects. We just need to be able to get the issuers in this area to understand that using the green channel could help them in raising the funds they need to drive growth in the businesses. So I'm hopeful for real estate, uh, and I've mentioned the solar, and then I've mentioned agric. In these three areas, I see opportunities arising for Africa because there are things that affect the basic needs of its people. The African continent is a continent that has a wide infrastructure gap, but first people have to meet their energy needs, their accommodation needs, housing needs, and then their their having access to food. And these three areas are where I see a faster growth compared to others, from my own perspective.
Thank you. And Justine, perhaps across the region perspective from yourself.
Yeah, I couldn't agree more with Emmanuel. I'd say 100% energy will be the story. I think that it is evident in what we've seen in Nigeria, and really been looking to Nigeria as a leading nation across the region, on how this can get done, and models that hopefully can be leveraged into other African countries where possible, where capital markets are viable. Which I do appreciate our challenges in being able to move capital in and out. But I mean, we've had, the government in Cote d'Ivoire who has, the ability to issue offshore and has shown great interest in seeing how they can potentially issue a sovereign that will touch on a lot of energy infrastructure needs, transport needs, and water needs. Resilience across water and our food systems in Africa will be critical. And so there's opportunity there. I mean, it's a coordinated effort of, being able to have leadership at the public sector level, mainly government level, and how the institutions move around that to be able to make things happen. When you see the leadership of a sovereign issuance, it tends to create a almost flow-on effect of other actors coming into the space, of which we've seen happening in Nigeria, and also putting the right market infrastructure in place to help foster the investments. But whether we see large scale, offshore, international, whether we see domestic, small scale issuances, and private placements and all the stuff in between, main thing is what's being financed, and there is huge opportunities for renewable energy rollout across the continent. In fact, we've just taken on a project that's going to be looking at renewable energy rollout in South Africa and different types of debt instruments we can use to help mobilize capital in that direction. There's also, things that we've in Ghana, obviously continued work in Kenya. So this story is there in Africa. It's, ensuring we can provide the technical capacity to be able to create knowledge and awareness on how this works, and bring it home to African countries, rather than it being seen as an international agenda. And so the more examples that we can show coming out, and the more further deeper work that we can do with governments and appropriate institutions to help foster market development, it helps for us to realize these opportunities.
Absolutely. Thank you for that. Your answer, Justine, and I'm cognizant that we're just about coming on the end of our time, but your answer really takes me back to the fact that the entire conversation around green finance is taking place really on the back of a backdrop of a convergence of finance on the global landscape between public and private markets. And really now, even in the post-COVID world, people asking what is the opportunity for impact investments and impact finance to come to the space. The IFC has identified a $26 trillion opportunity. And really, I ask myself whether this is really what is helping crowd in the room in emerging markets. We see that the issuers tend to be more diverse. We have a lot more financial institutions which lead the dialogue on the continent. Is this because you see at a more international or multinational level the crowding in and the blending of finance to create greater opportunity for African issuers looking to raise funding in international markets?
Yeah, I mean, especially the role of what we're coming with the development finance institutions, whether we're talking about the usual players on the field, World Bank and IFC, or even in the African Development Bank, teaming up with others that can be de-risking capital. We've seen that in the likes of Garanco recently with the Acorn issuance out of Kenya. There's also banks, commercial bank lending coming in with DFI lending, coming in with even in some cases the role of philanthropy and foundation capital, which tends to be sort of a first loss tranche of money that is not usually what the institutional investor is really willing to take on, right? So there's all different ways. Blended capital is something that is now, blended finance has got a new fancy term to it, but definitely something that is becoming ever so more critical, because let's be frank, straightforward vanilla bond issuance doesn't necessarily play out easily in even frontier markets, which many are the case in Africa, and even within the emerging market space, because it misses the market infrastructure to support it. I mean, this is a lot of what FMDQ has been honing in on and working on in the Nigerian context for the corporate bond sector. So, it is a critical part. It's not just about, like I said, straightforward bonds. It's about loans as well. It's all different types of debt instruments that we can work with. It's more about what we're financing, less so much about the vehicle. There's all different investor types that can come into this as well. It doesn't just limit itself to institutionals, and the interesting thing about Africa is seeing, the local investor base, particularly in South Africa and Nigeria, where the pensions are quite large. and the role that they play in moving domestic capital to a lot of this stuff as well.
Thank you. And Emmanuel, I don't know whether there's any thoughts you'd like to add on that, but maybe I can move towards a close. Still, really on the same, reflecting on your answer, Justine. Often, how it feels, certainly being an entrepreneur in the green finance space, is it feels that as though where we are with the taxonomies, whether you look at the EU around the world, globally, the level of cooperation that we have, the appetite for transactions on the ground, we're really almost right in the middle of carving a new language for value and for sustainability, and sort of how we communicate that value across finance, be it in green bonds or thinking about the resilience and sustainability of our houses in the green mortgage space. And I suppose now would be the perfect time to ask perhaps our last question for the afternoon, is as you think about this moment now in climate and green finance, and people calling to build back better and create sort of new frameworks of value, what is it, perhaps I'll start with Emmanuel first, that gives you, what do you see as the largest challenge on the horizon and the most significant opportunity on the horizon in terms of creating markets that are more robust, resilient, and invite new SMEs, corporates, and players into defining what sustainable looks like post-COVID?
Okay. I think for Nigeria, for example, if we really want to expand this market and ensure we entrench the concepts of a green economy, I think we have to have the regulatory stakeholders deeply involved, because this concept is new, because the players don't have a deep sense of understanding, and because the markets are a bit more regulated here. The only way to get the deep pocket institutional investors to buy into the concept, because if the investors are not interested in green products or buying up green bonds or green instruments, we're not going anywhere. If we really want them to get involved, it has to be regulatory driven. So things around getting, not actually asking them to dedicate a portion of their investments to green, but getting them to report, as we've seen being done in other climes now, where some institutions like the Task Force on Climate-Related Financial Disclosures has been doing. We'll need to have things like that in Nigeria, where there's a reporting dynamic requiring players to report on their exposure to grain, to report on their ESG risk. If they see this as a regulatory issue, then they begin to think about how to comply and how to get more involved in green products and green investments. So if we want to really build the market and expand it, we should find a way to get the regulators involved in asking for the key players in the market to report on the ESG risk. So getting regulators involved is one. Two, getting the media. One of the sessions we held with CB and FSD Africa was focused on the media after they wrongly reported something around a green bond that failed, whereas that instrument was not a green bond. It didn't pass any of the test. It wasn't verified. It wasn't issued in line with the right process and procedure for a green bond. So we need to get the media, because the media shapes the thinking of the people. What they read every day affects their thinking, affects businesses. People pick up the newspapers to check for information, for details. So two key stakeholder institutions we must talk to, we must build their knowledge and awareness and sensitize the regulatory relations or regulatory government and regulatory institutions community, sorry, and the media. So if we build the awareness and the knowledge in these two segments, you are on the path towards building a market. Otherwise, the traditional investor in Nigeria is quite focused on his returns, yields. He doesn't care as long as they can go on buying the traditional government bonds, and uh, because the regulations allow them to buy 100% if they want to, you know, they are not compelled to buy. They are also allowed to buy other categories of instruments, but they're not compelled to buy them. Is they what they want to see is yields and returns. But if there's a reporting requirement asking them to show the extent to which they have, dimensioned their ESG risk, or how their portfolio reflects this risk, then they begin to pay more attention to green. And then if you educate the media, the guys who report the news, who write about the news stories, who inform the public, if you educate them more and engage them, the more they report about green finance, the more they talk about it, the more the awareness will be driven. So those two key sectors of the communities are of the investor of the economy are the two sectors I think we can focus on if we want to drive the message and expand the green economy in Nigeria.
Thank you. Thank you for that contribution, Emmanuel. Justine?
I think, I think Manuel said it perfectly. I honestly wouldn't add more if we're speaking in the context of Africa. Number one is investors need to understand the risk, and many domestic investors across the emerging markets is still figuring out what that means. The advancements of ESG in the more developed economies, most notably in Europe, have been looking at this for the last 20 years. And, there's not another 20 years for other pensions, localized pensions around the world to get this. So, he's right. Emmanuel's right. The immediate focus is short-term return and yields, where that is that ability to think like that will expire very quickly, because if you just look what happened in this crisis alone, in the weeks in March, where central banks, particularly the European Investment Bank, the EU, ECB, central bank, and the Bank of England and the US Feds, right? Little people actually understand to the extent at which, like, the things that they had to do to save the economy, the global economy, from crashing because of the immediate effects of COVID. And in the case of the US Feds, with the oil crisis hitting the market, price war between the Russians and the Saudis, compounded by COVID, you now had a situation where investors were exposed to basically junk debt, because in a matter of weeks, many of the companies they had invested in the shale and gas industry were going bankrupt. Recognizing that they weren't going to be able to pay back their debt, dumping that into the market, and the Feds had to pick all of that up. The Feds are now exposed to 12 trillion of assets under management now. There was no screening process at all to determine the viability of any of those companies. The level of stranded asset risk on the US Fed's books today is bigger than it ever has. It's a bubble waiting to pop. So going back to Emmanuel's very poignant points, within the, looking, particularly if we're focusing on the Nigerian market for just a second, if those that are, responsible for people's pensions are not looking at the non-financial, that kind of hit in the Nigerian economy alone, let alone across Africa, would be devastating. It doesn't have that ability to take on that level of absorption and shock in the market. So this is why now more than ever, diversifying investments, the ability to make sure that transparency and disclosure on where these investments are going, the fact that this stuff is actually delivering across the challenges faced is going to be critical. And so, yeah, I think that's very well said, Emmanuel.
Well, thank you to you both. I suppose it falls on me now to sort of wrap up this conversation almost 20 minutes after the time it was supposed to. But exactly to what you referenced, Justine, on the conversation being so much more mature in other markets, which is really what gives the urgency to this very conversation that we're having. I think the statistics is that sort of green finance or environmental, social, and governance factors as a part of management in the company and disclosures is something that's sort of at an 86% level of awareness in corporates across Europe, whereas the same level of awareness on the African continent is still quoted at around 2%. It is astounding to sit back and think we're at the bottom of a really long totem pole, but this conversation this afternoon has really shown that from a global perspective, from a stakeholder collaboration perspective, in terms of the products that are coming out of Nigeria and Kenya with their recent issuances, as well as South Africa on the mortgages, the products are heading in the right trajectory, as well as the tracking and disclosure all across the continent. And so I'm really encouraged by that, and would like to end the afternoon by thanking you both for your time, as well as our audience, which is varying degrees of familiarity with both Africa and green. But we are Igugu Global, and we hope to be here to continue holding the green finance deal room conversation open to issuers, investors, and corporates, and everybody else thinking of beginning their journey to the low carbon transition. So with that, my name is Anele, and I'd like to thank you again, Justine and Emmanuel.
Thank you very much. Thank you, Justine. Thank you, Anele. Thanks, everyone. Thank you.
Ciao.
Ciao. Bye.